There are several key reasons that affect the exchange rate of the country. While the changes in market inflation cause changes in currency exchange rates, fluctuations in the interest rate also affect currency value and dollar exchange rate. The other key factors are the country's current account or balance of payments. Other causes include the amount of debt the government is in, as well as the political stability and international confidence. Over the past 32 months, various inquiries, investigations and judicial processes in relation to Sri Lanka's biggest ever economic scandal, the bond scams of February 2015 and March 2016, have been carried out by different authorities. However, due to the complexity of this issue and the subsequent masterly cover-up attempt, the magnitude of the monetary, economic and social losses have yet not been scientifically or authoritatively assessed. During the controversial bond scam on the 27th of February 2015, where bonds worth 10 billion rupees was issued for 30 years, the interest rates went up by 3.15%. As is well documented, the interest rates in the government securities market had been on a declining trend from about mid-2014 onwards, and just 1 week before the controversial bond issue, the secondary market trading showed that the 3-month treasury bill was trading at around 5.86%, the 1-year treasury bill was trading at around 6.1%, and the 30-year treasury bond was trading at around 9.48%. While the latter rate had apparently dropped to about 9.35% before the February 27th auction date. According to central bank data, for the first quarter of 2018, exports have increased by 7.7% during the first quarter of 2018 to $2,989 million in comparison to $2,774 million during the same time frame last year. Imports have risen by 13.1% to $5,971 million during the first quarter of 2018, while the value stood at $5,279 million during the first quarter of last year. The trade gap thereby stood at minus $2,982 million in the first 3 months of 2018. Economists say after US elections in November, most emerging markets' currencies depreciated by sizable margins. In contrast, Sri Lanka's exchange rate moved the least among EM peers despite similar movements in bond spreads.
But if you take the lens zoom out of what's going on in Sri Lanka and look out what's going on in the other countries, we can see that this depreciation or devaluation against the rupee is not only common to Sri Lanka. So if you look at countries like India, if you look at Philippines, if you look at even countries like Pakistan, they're seeing much more depreciation than us. And that is primarily as a result of a significant factor, which is the dollar strengthening. So all these currencies and Sri Lankan rupees reference against the dollar. So when the dollar strengthens, the countries like Sri Lanka and India and Pakistan, their currencies weaken as well with a strengthening dollar. And so that in itself has, I think, been one of the factors why the rupee, for example, has come off. And
if the government was able to manage the economy and have strict fiscal discipline and control, the rupee will not fall to this extent. In terms of the balance of payments, if the levies imposed on exports such as the duty and cess on tea exports were relaxed further, the export quantities would increase, causing the gap to reduce. If the government objective is to increase agricultural exports, the government may well have to desist from relying on persons with no expertise or scientific knowledge who have tampered with invaluable resources, similar to the use of glyphosate that has significantly affected the production of tea and thereby exports.